Hey there, my friends. Kirk Shinta Turnipseed here. So excited that you guys are here today. We are going to talk credit, okay? I know that a lot of people want to repair their credit, so we're going to talk all about it today. What we're going to start off talking about is how our credit scores calculated, okay? How our credit scores calculated. This is an important piece because a lot of people miss this when they want to start the credit repair journey. They just jump into like, how can somebody, fix my credit, dispute this, dispute that. But if you don't understand this piece, which is the foundation, understanding how your credit scores are calculated, you cannot fix your credit. So this is what we are going to talk about today. So again, I'm Kirk Shinta Turnipseed, and I am a credit restoration coach. I also help with things like business funding and business credit. So those are the things that I help with. If at any point you decide that you want to restore your credit, you want to start the process of restoring your credit, message me. Or if you're watching this on one of my other social media streams, check out the link beneath this video. Let's jump right into this. We're talking about how our credit score calculated, but I want to first start with some fun facts. Now, before we jump into these fun facts that you need to know, go ahead and drop in the comments. Let me know where you're from. Where are you tuning in from? Let me know that. And if you're watching this on replay, go ahead and put #replay so that I know that you're watching this on replay. But anyways, there's 43 million Americans that have a credit score of 599 or less. That's a lot of Americans with a credit score of 599 or less, right? 43 million. I can only imagine that as this pandemic goes on, that number will increase, that there will be more and more people with a 599 or less, okay? And if you don't understand that, to really get things at an affordable rate, you need to have your credit score together, and it needs to be higher than a 599, because otherwise you're paying up the wazoo for things that you want, whether it be a car, whether it be a house, you name it. You're paying thousands of dollars extra. You're being asked to put deposits down, things like that. So it costs you, right? Not having a good credit score costs you. Okay. The lower your credit score is, the higher your interest rate is going to be. Okay. And the higher, your credit is, the lower your interest rate is going to be. Now, there's some other things that go along with having what we call bad credit, right? The anxiety, the embarrassment, the frustration, the confusion, the fear, things like that, right? So, I want you to imagine this. Imagine your car breaks down and you have bad credit, or you live in the hood and let's say you have a baby, right? And you really want to move out to a better place, have a better apartment, have a better environment. But that bad credit is keeping you stuck from getting that better car, from getting that better apartment. Drop a 1 if you've ever felt stuck with your credit. Drop a 1 if you've ever felt that way. I know that I have, right? This is why I said, okay, now's the time for me to do this, right? So, a lot of people can relate to that. So this is why good credit is important. So good credit can help you do some other things. It can help you get into a house, right, with a low interest rate, saving you thousands over the course of the loan, and not have to pay all those extra costs that go with that house. It can help you get into new cars, not have to settle for a used car because that's all you could afford because your credit is so jacked that they won't approve you for anything, right? Higher limits on your credit cards, right? You can get higher limits when your credit is better. You can get contracts without security deposit. You're moving into an apartment and not have to put $300 down on the utilities and things like that because they don't think that you're credit worthy, right? Stuff like that. And then, of course, getting lower interest on your credit cards and your loans. The lower your interest rate is on your credit cards and your loans, the more you're going to save. So really good credit is a saving strategy as well, right? The way to wealth is to protect the money that you have. It's not, a lot of people get stuck on that. I need to make more money to make more money. Well, you need to find ways to keep more of the money that you already have because that's a wealth principle as well. So good credit is a foundation to that. Okay. So let's jump into how is your credit score calculated? Okay. 35% of your credit score is your payment history. Okay. Let me repeat that one more time. 35% of your credit score is your payment history. that means that you need to pay your bills on time. Now, if you don't pay your bills automatically, get you a calendar and put in when your bills are due, right? So that you make sure that you pay them on time. Set a reminder on your phone. Make it happen. Okay. If you need to get if you don't have enough to pay your bills, then that's a whole nother thing. You need to reach out, right? Because that's where you need to maybe apply for a better job. That's where you need to look at decreasing expenses. That's where you need to look at bringing in an extra stream of income, right? But the key thing is pay your bills on time, because 35% is that payment history. And you need to make sure you're paying at least the minimum payment, right? The last 24 months of your credit history are extremely important. Okay, extremely important. So just remember 35%. The next 30% is capacity. That's the amount that you owe on your credit cards and your loans. Okay, so basically it's a percentage of the credit limits that you have available. So for example, you have a credit card and that credit card has $1,000 limit. Okay, you don't want to use more than $300 of that $1,000 limit at any given time. Okay, because this is capacity / utilization, whatever you want to call it, right? The credit bureaus are looking at those things. So you want to make sure that you keep your capacity low. You keep your credit limits low. Okay, so when you can, pay your credit card bill in full, right? Pay it in full and keep the amount that you owe under 30%. Okay, now here's another trick. And when I learned this, my credit score actually today went up 13 points in one day. Here's a little trick. Let me tell you. Make your payments by the statement closing date. So when you get your credit card, right at the top, or when you get your credit card bill, I want you to pay. A lot of people never pay attention to this. When you get your credit card bill, your next credit card bill, right at the top, it will say it'll have your closing date, and then it will have your due date. Most people pay their credit cards by the due date. What you want is to pay it by the statement closing date, because that is what is reported to the credit bureaus. Okay, so when you pay your bill, your credit card bill or your loan bill or whatever by the statement closing date, your utilization is gonna look like it's lowering, which is gonna help your credit score. So that's a little trick right there. Remember, that's what's reported to the bureau. So I actually have in my planner the closing dates of my cards. Okay, so that is important. Pay it by the closing date. If you can pay all your bills at once a month, do that too, right? So that way, most of the time you're going to hit those closing dates as well. All right, so remember, 35% is payment history, 30% is capacity / utilization, right? You want to keep that utilization below 30%. All right, drop a 2 if you're starting to understand what I'm talking about right now. If it's starting to make sense that right now 65% is your payment history and your capacity / utilization. That's a huge chunk of your credit score. All right, now the next 15% is length of your credit history. Woo. For those of you who have children, pay close attention. This is really, really, really important. Okay, 15% is length of credit history. What does that mean? Okay, how long have you had your accounts? I wish I would have known this. I got my first credit card and hardly spent anything on it when I was 18 years old. Okay, and as soon as I paid that card off, you know what I did? Cut it up. I literally cut up my credit history by doing that. When I could have just kept the card, maybe like put some gas on it or something like that. And then because that was my longest standing card, I was building history over time with that account. Okay, so the longest card you have is extremely important to your credit score. Okay, so again, 15% is length of credit history. How long have you had your accounts? Now, for those of you who have children, you may or may not know this is another wealth principle, right? For those of you who have children, you can add your children when you get your credit fixed. Don't be doing it now. Okay. You can add your children on your credit cards as an authorized user. And at 18, they'll already be building credit. By the time they're, 20, they'll have or 25, 30, they'll have a long credit history because you started building their credit for them. You can one day I'll do a post about it, but there's a lot of people have their kids as authorized users on their cards from the time that their kids are like 10, right? And there's a lot of credit card companies that will allow you to do that. So that's if you want to help your children start getting a jump start on getting that length of credit history early, that's the way to do it. All right, the next 10% is new credit inquiries. All right, that's the number of inquiries and new accounts. So when you apply for a credit card, you apply for a loan, that's an inquiry, right? They're going to run your credit report. They're going to inquire about your credit, right? So they're also going to look at the number of inquiries open in the last 12 to 18 months. You want to limit, ideally, limit your inquiries to 1 or 2, cards that you really, really want, maybe a cashback card or something like that. And the next 10% is the types of credit. So this part, pay attention, right? There's 2 types of credit that are very important to your credit score: installment and revolving. Let me explain what installment is and what revolving is. Okay. Installment loans or installment credit is anything that has a set amount. Think about things like your house, your mortgage, your car note. That amount does not change from month to month, right? If your car note is $242 every month is the same amount that you have to pay. That is an installment credit account, okay? So 10% of that is making sure you have a mix of both installment and revolving credit, right? Your house mortgage is the same amount every single month, right? Things like that. And then your revolving accounts or your revolving credit is like a credit card, okay? Every month is different. So one month it could be 100. You went shopping, it's 300. It could be the next month 200 from month to month. Those are what are called revolving credit. You want to have a good mix of it. So, for example, if all you had were loans and you didn't have no revolving credit, you would need to get some revolving credit to show your credit worthiness, right? To have a good mix, right? Same thing. If all you had were a bunch of credit cards, but you had no installment accounts, you didn't have any types of accounts like that, you would need some of those. Okay. Now there are some, let's talk about these installment revolving accounts. There are some simple things that you can do to boost your credit. Okay. You can do things like, ask me about this. You can use a service that will report your rent that you're already paying. It will report the rent that you're paying to the credit bureaus, and it will basically it will report as like a trade line, and that will help boost your credit score. This piece of hair is driving me nuts. Other things that you can do, ask me about how to get a secure credit card, and I can show you which ones are good, which ones that I recommend. You could get a secure credit card. That will help also boost your credit score as well. And if you don't have some of those revolving accounts, those are some things that can help you. Okay. So I really do hope that now you understand, about how your credit score is calculated. Let me repeat it one more time. 35% is payment history. 30% is capacity. 15% is length of credit history. 10% is new credit inquiries. 10% is types of credit. Okay, this is how your credit score is calculated, and understanding that is the foundation of credit repair. Okay, so if this was of value to you, I want you to drop an emoji below to let me know that this was of value to you. Right, and if you want to restore your credit, message me. Or again, if you're watching some other social media, check out beneath this video. Also, if you want to learn about the rent program where you can report your rent and get credit for that, and that reporting to the bureau, let me know as well. All right. Share this with other people so they can get their credit together. And I'll see you in the next live, guys. Bye.